Hello everyone, welcome to the channel. Today we're going to look at back testing a trading strategy using software different than TD Ameritrade's thinkorswim, where you have to use either their predefined strategy or you have to understand a little bit of how to use their ThinkScript language to alter a predefined strategy or create your own. So right now this is a TD Ameritrade. This is the thinkorswim platform, sorry, by TD Ameritrade. And these are entries and exits, or opens and closes, with floating profit and loss down here off of a strategy that I had predefined from a different video. So if you're familiar with that video, then you know that what you have to do is you have to go in and you have to create your own strategy, right? So this is the strategy that was created in that video. What it is that it buys when the price crosses above the EMA long, whatever we define that to be. And here the EMA long is going to be EMA 1, which is 20, and then the EMA short, which is where we sell, we have defined as EMA 3. Now I have it broken out like this because that way you can change them without having to come in here. But anyways, I'm just showing you this is what you have to do. You have to go into and understand how to use in order to backtest these strategies using the thinkorswim platform. So with that said, I've been getting a lot of interest about how to backtest strategies and how to use the thinkorswim platform with ThinkScript, and people asking me about the coding and how to learn it and stuff like that. But if your primary purpose is to backtest strategies and you're not so much interested in learning the ThinkScript language or how to use all these little mechanisms for tweaking these strategies inside of here, inside of these strategies here, then so let's add this, and then let's look at the source. So add order. This is basic. I don't even know if you could use this. This just sells something when the high is less than the low and there's nothing else in here, right? So it doesn't even seem like this is completely done. I've never clicked on it before, but whatever. So I guess that's just to sell, automatically sell during a gap down with nothing for buying, right? There could be a short position where you want to short it because it's gap down, you think it's going to go further. It could be sell because it's gap down, which kind of seems weird because sometimes the gap down can retrace a little, whatever. But anyways, my point is, if you don't want to learn how to do all this stuff, then there's an alternative out there. But it does cost money, and but it also has a free 7-day trial, I believe. And it is like saying it's expensive is subjective, right? So if you're watching this and you've got, let's say, a couple $100,000 and you want to figure out how to best invest or trade your money, then me telling you that this service is $79 a month shouldn't really have that big of an effect on you, right? But if you are a person with a smaller account value, then maybe $79 a month is a lot of money. But the free trial, 7 days, you do have to put in your credit card, and this isn't my stuff. I'm not pushing my own product here, but you do have to put in your credit card, but you can cancel it, right? So you sign up for the 7 days, put in your credit card and all that stuff, and then on like the 6th day, you just cancel it. Then you could use all their features. You can backtest to your heart's desire until you get sick of backtesting, and then cancel it and not have to pay anything. All right. I've seen other people do it. I've done it before, but it's a really good service, and I think that you just kind of get sucked into it because it has a lot to offer. So with that said, of course, if you're not familiar, I wear these because they're blue light blocking, and if you're interested in getting some, they're made by Gunnar. Or Gunnar, whatever. I'll put a link in the description. So let's just get rid of TD Ameritrade. All right. Bye-bye. This is the service. So I'm going to go to the original thing right here. So this is their website, and I'm already logged in, so it's got me logged in. But this thing is powerful. There's a lot of stuff going on here and a lot of features. And chances are, if you've never used it before and you're paying and you sign up to pay for it, you're not going to get your money's worth up front because you're just not going to know how to use it. But you have to spend the time trying to figure it out, right? Let's look at the plans and pricing real quick. So this one right here, now notice this is a yearly price per month, right? So monthly price, $79, right? So this is the one that I'm using, all right? And you can get a 7-day free trial with all of them. But this is what we're interested in. So a new thing that they have now is trading bots. They didn't have it last time I was looking at their stuff. But they have a lot of charting features. I'll let you go in and look at that yourself. And what we're interested in is, where is it at? Backtesting, right here. Notice the cheap one has no backtesting capabilities, but Elite and Advanced has the same. So there's no reason to get Advanced unless you just have to have the best. There's very few differences between Elite and Advanced that are going to make a big deal between or to a new customer, in my opinion. So it's some of these things like different workspaces, how many alerts, the time frame for the alerts, results per scan. Like, you don't need those. You can just rescan, right? Trading bots. And if you're just learning how to use it, then why you would need more than one trading bot, I don't know, much less more than 3 or 5. Again, number of workspaces. It's pretty much all the same stuff. And then down here you get max results again. What else? Alerts expire in a time frame, or no, I'm sorry. Yeah, time frame. Then the number of alerts, active bots, support, whatever. Like, it's almost the same thing unless you're looking at the number of workspaces, the time frame, and the number of alerts, and the trading bots. As far as I'm concerned, if you're new to this and you're trying them out, Elite, right? If you're going to pay for it, because that's where you're going to get the best bang for your buck. So, and they have a whole bunch of information to learn how to do this. They even have their own YouTube channel. I'll put a link in there because they're going to be able to explain their product better than I can explain their product. So I'm just showing you how someone that doesn't work there and didn't create this stuff uses their product in comparison to thinkorswim, right? So here we are. This is the same ticker that we were on before. Now, I have strategy tester on. So remember before, we had to know that we had to go implement a strategy tester and through the studies and all this other stuff and possibly learn how to code in the different conditions. We're here. They even give you some pre-built strategies and you can search for some too. But it's really simple, right? So you have all of your different conditionals here, like what kind of candles do you want? You want their proprietary raindrop candles, which is pretty cool. I'll show you that. Or just a general open, high, low, close, whatever, right? So time frame, data. So the data just on the chart, 1,000 candles back, and then it goes all the way to 7,000 candles, which is a really far back test, right? And then trade by next open, high, low, close, and the conditions, right? Long only, short only, and then you run it. So I don't have anything chosen yet, right? So what I'm going to do is I'm going to pick one from over here. So it doesn't belong to me. So what I'm going to do is I'm just going to say clone this strategy. Okay, cool. So it's a copy, and now I can alter it however I want to, right? So what this strategy does, this is on the 30-minute window. Can I change it right here? Yeah. So just from right here, we can change this, and see how it ran it right away. And this strategy over the time frame, over 5,000 candles, long positions only on the 1-hour chart, this performance was 141.85% versus 46.93% for asset performance. So what does that mean? So using this strategy, this isn't mine, it's just a pre-built one. So using this strategy, the performance was 141.85%. The asset performance is just buy and hold, right? Imagine you just bought and hold. That's what the asset did over the time frame, right? So clearly on the 1 hour chart, this strategy is significantly better, right? But let's back this out and let's look at the daily. So I'm going to change this one up here. And notice when I change it up here, it does not change it down here, okay? So come down here, I'm going to click daily and it should run it. And it's, again, 5,000 candles. Let's see how that performance did. So look at that. Still significantly better than asset performance, right? It's almost double. But before it was more like, I want to say it was close to quadruple, right? So let's go back to 1 hour. So let's say 4 times 4 is 16. That'd be 160. So it's almost quadruple. But then we go to the daily time frame, right? And now it's, you know, almost double, not quite. And let's go ahead and look at what it would do on a weekly time frame. So right here, this is one thing I want to point out, and this is a personal opinion about trading, about trying to be a short-term day trader versus I'm sorry, I shouldn't say versus, a short-term day trader trying to beat the market, right? Look at this. This strategy was good in the daily and in the hourly candles, right? But in the long term, let's say you wanted to implement this strategy on this stock over the long term, right? Without touching it, you would only get 7,792.4%. I say only, right? Because that's still pretty damn good, right? Versus almost double if you would have just bought and held, sorry. If you just buy and hold or bought and held, right? So this is one of the points that I want to make. And I'm going to harp on this in all the backtesting videos that I end up making. Buying and holding, you over the long term, provided the stock is not a piece of garbage, right? Buying and holding, in my opinion, will yield your best result. Because if you're trying to time it right on, you're trying to the turns, right? So where it goes up and it's come down, you want to get out at the right time, or where it's down and comes back up, you want to get in at the right time, or vice versa. If you're shorting, if you're trying to time that perfectly, you're never going to time it perfectly. I think there was a quote in the latest, not Wolf of Wall Street, Wall Street Money Never Sleeps with Shia LaBeouf, whatever, where he's got the old Gordon Gekko in there. Where at the very end he says something like, "Don't get something along the lines. Don't get greedy. Don't try to hug the corners or whatever." What he's referring to, at least what I think he's referring to, because it makes sense, is this type of stuff right here. Like when you're coming up, don't try to get out right here. Get out here and just wait. And then as it come back down, you know, okay, it's come back down. Let's ride it and short it down. Oh, it's like it's leveling out. Let's get out. Oh, okay, it's going back up. Let's get back in. Don't try to time it perfectly, because you're never going to time perfectly. You may every now and then. I shouldn't say never, but generally speaking, you're not going to time it perfectly most of the time. So don't try. And over the long term, right? If you look at the long term, your strategy is not going to outperform just holding the asset. Based on that, now we could put in a different stock, right? Let's put in Apple. Now I'm picking assets that have just skyrocketed, right? I mean, look at this. You're not going to beat that. Come on. Look at IBM. I'm trying to think of one right now. So this is weekly. So still, like, yeah, you're up, but imagine all of the time and effort you had to put into doing this if you didn't have a trading bot over these years, because, you know, trading bots are relatively new for the last however many years. I mean, they were not new on Wall Street. They're for retail, they're relatively new. But look at this. No, what's something that's just tanked? GE, has it tanked? I'm trying to think of something that's just down. Look at this. 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 So this is weekly. I can't zoom out anymore. This goes back to 2010. So trying to implement your strategy on GE, you lose money, right? Now, I think this chart is going back further than maybe what's on here, or this. Let's see, where does this go back to? Let me see if I can find it over here, because it's been a while since I've used it. So asset performance, 5,000 candles. Does that change anything? I haven't used this part of it in a while. So if we go to 2010, yeah, it's just zooming in on this chart. So you're actually down. Now, the stock could be down due to price splits or whatever. I don't think that's the case because I think these charts adjust or whatever for that. But bottom line is you would lose almost 20% versus just buying and holding. You would have 770%. So that's another thing I want to point out. Not every strategy will work on every stock. It's going to be a distribution, right? If you apply the same strategy to, let's say, 20 stocks, chances are there's going to be some losers in there, right? So now I told you it's easier to set up a strategy in here, and all I've done is shown you a pre-built strategy. So let's go set up our own strategy real quick. So let's come down here and let's get rid of this. And let's get rid of all of this stuff. And then let's just do, I just want to look at what's on the chart. And let's do a, I don't know, daily. Let's go back to AMD. I just like AMD right now. I've always liked AMD. It's a good company, and I have their CPU in my computer. So we didn't run this, and we're not running this, but you have not saved this changes to this. Are you sure you want to proceed and lose? Yes. Okay, so now we're starting a brand new strategy. So I'm going to implement an EMA crossover strategy. So let's see, this is the 9 and the 20. So what I'm going to say is I'm going to buy when the 9 crosses up the 20, and I'm going to sell when the closing price of the candlestick crosses below the 9. So like right here, I would be buying right here if I set this up properly, and I would be selling. It might sell right, no, because that's not a close. So it might sell here, maybe, but definitely here. We'll see what ends up happening. So let's do this. Add parameter, condition, indicator, exponential moving average 9. See, I wish this little drop down was bigger. That's one complaint I have, but whatever. Crossed up, indicator, exponential moving 20. Okay, cool. Now, add script, and then condition, price. So open, high, low, close, or the open, the high, the low, or the close of the candle, right? So I'm going to choose close, and I'm going to say there's no cross here. So I'm going to say less than, because equal to is not a full cross. My mouse is acting up. So less than, indicator, exponential moving average 9. All right, cool. That's it. Nothing else on here. So just for what's on this chart, just these. The daily, we're on the daily, long positions only, and trade by the next open. So whatever the next open is, that should be around here. So we should see some action here, right? Run. Okay, no, it tells you backtest started here. All right. So then we waited, and right here we get in because it closed right here. So this was the close when it went up, when the EMA crossed over. So we get in here, and we ride up, and here's the exit. So it closed, and then on the next candle. So maybe trade by. Let's see if close changes it. No. Open, high, low, close 4. No. So I'll just do open. I think open will get you in at the open of the next candle instead of the close of the next candle. But yeah, so trade by next open, right? Okay, cool. So that means you're going to be making a trade by the next open candle as opposed to the next close. So really, you may not get in at the next open. So trade by the next close means you'll get in at some point during that day, right? So here we go. This strategy of getting in when the 9 EMA crosses over the 20 and then getting out when the price closes below the 9 by the next day's close, right? Yielded 10.72% versus negative 46 on the short term, right? So this is short-term trading. Now, this doesn't account for any potential profits or losses you could have made if you just flip this and say, okay, an exit from a long is my open from a short, and then you get out, but then you short here, and then you get out of the short and then into the long, and then you get out of the long into the short, and then you get out of the short into the long, out of the long into the short, right? You see what I'm saying? So this is just for the long side. Now, if I back this out and I do, well, first of all, let me back out the data. Let me go out to just 2,000 candles. Let's see how that changes. Wow. So 2,000 candles. Since we're on daily, this is going to be 2,000 market days, right? Which is like what? 300 roughly times 6 is 1,800. That's more than 6 years we're going back. 6, 7, probably closer to 7 years, right? I'm guessing. It's around 7 years, I'm guessing. Let's do it real quick because now I'm curious. 2,000. So let's say there's no holidays, right? So 52 times, that's how many weeks, times 5 trading days a week, 260 trading days a year. So then we do 2,000 divided by 260, 7.69. Now you account for holidays and whatever. Okay, so cool. I was close. So what am I saying? So long term, it gets worse. So in the short term, for just this part of the chart, we were up 10% and the asset was down like 46%. You bump out to 2,000 candles and all of a sudden you should have just bought and held, right? Let's go to 5,000 candles. Oh no, it's even worse. Buying, you should just buy and hold. I don't know how else to put it, right? And then the deep 7,000, you could have made double. Again, 110% is nothing to shake a stick at, right? It's not bad. But if you just would have held, you wouldn't have all of this stress and tension about getting in and out at the right time, blah, blah, blah. And I suppose if you have a bot doing it, but then if you have a bot, you're paying for it versus just buy it, forget about it. Now, provided you don't think AMD was a garbage company back in the day, this could be the returns for just buying and holding, right? So that's a simple crossover strategy. Now on the other one, I think it was price. So we did price crossed over, right, on TD Ameritrade. So that's easy. So let's just get rid of this and let's do add parameter condition price, the close, greater than the indicator exponential moving average 9. And then here, this is the price closing below. So this is the only thing we had to change is the entry. So let's run, wait, where are we at here? We are 7,000. So let's go back to chart and it's going to run it. See, if we switch over to price crossing over, then we drop down and we lose almost 30%, right? Because we go from plus 10 to minus 20. So yeah, that's not a good strategy on this. So, and you can see, let's see, like right here, this price crossed over, but the EMA didn't cross over, right? Whereas here, the EMA crossed over and then you had a little bit better upward pressure, right? So that's the difference, the subtle difference between those two backtesting strategies. Now let's try one more. Let's do price close greater than let's do 20. So this is going to do this. So when the price crosses above the 20, it's going to get in. So it's waiting for the more medium term trend to take effect, but it's going to get out when the short term trend goes bad, right? That's essentially what I'm considering. The 9-day exponential moving average a shorter term trend, and the 20 the medium, right? So let's run this. Now, before we had negative 20 and 46 for price crossing the 9 and getting out on the 9. So here we're back to almost 10%. So really, we could have just done the crossover and got an extra percent out of that, right? But then let's back this out and let's do deep. Wow. So here's an instance, and I'm kind of surprised that I may have to try this strategy. I wonder what else this might work on. So what is this? This is the price closing above the EMA 20 and the price closed below the 9. So essentially, like, you're riding the medium term trend, because the medium term trend is now going up. This is like almost like a Bollinger play, like a Bollinger Band, because the 20 simple moving average is your middle Bollinger with, and your upper and lower Bollinger Bands are a standard deviation off of it, right? But an exponential is going to move a little bit faster than the standard because it's going to be weighted more towards the most recent price events. So if you hear my dog, I'm sorry. That's how he lets me know he's ready to come in. So let's go ahead and add this. Let's add a simple real quick so I can show you. Simple 20 orange. Okay. So let me zoom in. So the 20 exponential is the lighter orange. And then the 20 dark orange is the simple. I don't like those colors. They're conflicting. Let's change the simple. And let's look at, where's all my colors in here, man? Well, that's not very nice. It must be easier here. No? I don't want to put in color codes. Here, let me add a different one. Yeah, there we go. Simple. Now it's green and green. Okay, let me just get rid of this one. So we'll take this 9 exponential off real quick. All right. So the exponential is the orange and the simple is the green. Same time frame. So you see the orange starts to tick back up faster than the simple when the recent price action starts to move back up, right? And the orange starts to come back down faster than the simple. You can even use this as a trading strategy. You know what? I'll do that down here. But I'm really surprised to see that this did so well for this. So what was that again? Price above the 20 and below the 9. All right. So let me go ahead and get the, let me try this strategy for some other stocks. IBM. So really, we're just looking to see if we can beat the buying and holding. Nope, not for IBM. Could just be an anomaly. So you may get some that win. Apple. 17985.42. Nope. I think the 17985 is better than before. Let's do GE. Oof. Nope. We still did better than buying and holding, but that's kind of a waste. Let's check Microsoft. So this is 7,000 candles back. So yeah, it looks like it's an anomaly with AMD, which it happens, but as you can tell, the other ones that I've checked, apart from less of a loss with GE, so I guess that's 2 wins, sort of. You can even do cryptos. So Bitcoin, Bitcoin USD. What's all these different things in here? Let's do Bitcoin USD. And then which one do we want to use? Let's use Binance. So you would have won on Bitcoin. Cool. Now let's check one more, and then I'll call this video quits because it's already 30 minutes. But again, I'm just trying to show you that there's an easier way to do it if you want to spend, you know, a few bucks. So let's try the, what did we have? We wanted the exponential moving average, so the indicator of the 20 exponential crossed up the indicator of the simple, right? So that's going to be like right here, and then it's going to get out right here. And then let's see. So here's a bad, I can already show you a bad point. So right here, the exponential cross, so that would have us getting in here and then out here. So you get in about here, and this is kind of like a wash. It's going to break even almost, right? So we'll see how this plays out. Indicator, we want the exponential 20, cross down the simple. Now let's run this. So that works here. Now again, this is daily. We're looking at longer time frames in general here. Let's go back and check this one for Apple. And then, so 3,900 versus almost 4,000% versus 35,000%. Not even a question. But I guess in hindsight, it's easy to say that, right? Because you don't know if, like, way back in the day, you don't know if Apple's going to blow up the way it did, right? So it is what it is. So I guess you can take this difference in performance on your trading strategy versus buying and holding. You can call it a locking in your profits peace of mind factor, right? Oh yeah, if I would have held, I would have made this much, but I only made about 650%. Like, you didn't know it was going to do as well as it did, right? So that's another thing to consider. You know, I know I said that buying and holding will generally, in my opinion, always beat out the trading strategy, but I guess that's out of hindsight because I'm choosing these companies because I know that they're here and that they had really good runs. And I tried choosing one that didn't have a good run, but the problem is that choosing a company that doesn't have a good run over a long period is difficult because those companies generally don't stick around, right? So it's hard to figure out which ones to choose. So this strategy would work well with GE. So if you just don't look at the asset performance over the long term and you only look at how your strategy is doing, then if you are in the plus, I would say you're good. If it's in the negative, then I would say compare it to buying and holding, and you did better than buying and holding with your strategy, so you mitigated some losses in there. So I guess that's a different way to look at it, which, you know, is causing me to alter my opinion on this a little bit. But for most people, unless you get really comfortable and you're just willing to risk it, buying and holding across a spectrum of different assets may be better. I don't know. That's something you have to figure out for yourself. But I'm really taking a different look at it now after seeing some of these strategies and rethinking how, you know, this is all in hindsight. So hindsight over being able to see what these assets have done over decades, right? Because you're not going to know that back then. But if you just apply this strategy and you use a trading bot, then it takes all the human emotion out of it, and it's just buying and selling based on these conditions, right? And if you've back tested it on multiple stocks and you're trading across multiple stocks, and most of your back testing is a positive percentage game, and let's say it beats the market, the average 10% return, and then it minimizes your losses in stocks that have losses over those long time frames, then I would say it's a win because you're up, you're doing better than the market, and you've minimized losses where there were heavy losses. So I may have to revisit that and make another video about my opinions on that because it's kind of getting a little convoluted right now. So bottom line is this is some software that is very easy to use. I think it's a lot easier to use than thinkorswim as far as their strategies and having to put profit and loss on there. And there's a lot of things you can do with this software, which I'm not going to get into this video. But if you're interested, like I said, I'm going to put a link to this company's YouTube on the description, so go check it out. And if you want me to backtest a strategy for you, leave the strategy down in the comments, and I will make a quick video. I'm not going to go into a whole lot explaining. I'm just going to say, like, somebody wanted me to backtest this, so we're going to backtest this, and I'm going to put it on a couple different stocks and maybe a crypto just to see how it works. And it'll be a short video. It won't be a long one like this. So let me know what you think. Let me know if you think $79.99 a month is too expensive. Personally, I think it's expensive, but I don't use all the other features, at least not yet. So maybe when I start using all these other features, it may not seem like it's that expensive anymore, but it's definitely easier to use than TD Ameritrade's thinkorswim backtesting. It's simple, right? And plus you get all this other information over here too, right? So it's just simple. It's easier and it's more, what's the word I'm looking for? Phrase. I don't know. It's just simpler. I was gonna try, and I had something that came on the tip of my tongue, but I just couldn't think about it. And then I think this is like projection of where the stock might go. I don't know. It's kind of weird, but let me see what it projects AMD. So where is that? Why was it up there before? See, I'm still trying to refigure some of this stuff out. Like, these are all the features that come with this, and I'm just using backtesting. That's it, right? So I can come on here and let's turn off strategy tester, and then let's look at let's do this time frame, and let's go to 4 hours. Trends. It's drawing trend lines, right? And you can do standard, enhanced. I mean, this thing can get crazy with trend lines. Look at this. Like, you have to go and you have to learn how to set these things up, right? And it will do a lot of the work for you. So I might get into that with a different video, but right now we're just looking at strategies. Let's run this one. This isn't mine, but as I've shown you, these things are easy to use. So with that said, I'll go ahead and leave this video here. If you have any comments, questions, concerns, feedback, leave it down in the comments. If you want me to backtest a strategy for you, leave it in the comment, and be sure you're specific about the conditions you want. Don't just say something like, oh, backtest a VWAP. Like, how? Based on what? Like, you need, when this happens, you need to do this, this crosses this, or this price is this, or whatever. So just let me know, give me some details, and I'll try and get a video out of that. And I apologize again, since I haven't had a video out in a while. I've been busy with my classes and my teaching assistant duties. So I'm trying to get some videos out, but that part of my life is priority right now. So give me some time and I'll get some more stuff out, and let me know what you think about this backtesting compared to thinkorswim. Are you going to stay with thinkorswim, or are you going to do this 7-day free trial and maybe put your money over here and see what they have to offer you? Yeah. And then what else? Oh, and then I have an affiliate code. So, you could help me by using my link, and then it doesn't charge any more or whatever. So if you end up using it, it helps me and helps the channel, since I don't have 1,000 subscribers and hours yet. So that's a different way to help the channel. So yeah, just use the link, go and check this place out. And then if you cancel after the 7-day free trial, no big deal. All right. So let me know what you think.